Hello everyone, welcome to another video where we discuss your career, or rather all things accounting. Yeah, so today we have another one, and we have another episode which we will be talking about SAIT. So SAIT is the South African Institute of Taxation, right? So you can qualify as a tax advisor or a tax practitioner with SAIT. Those are the two major roles that you can be involved in. So today we'll be just breaking down, or rather just unfolding on how to become a member of SAIT and how to actually become part of those, or rather have those ATSA accreditation behind your name. So yeah, let's get to it. And here we go. So firstly, you would have noticed that it's from the series that qualifying as an professional accountant, not necessarily cyber, but qualifying as somebody in the accounting space like requires your NQF level 8. Yes, it requires honors. So for SAIT, it's also the same. It requires honors. So, but the interesting thing is that it doesn't require necessarily honors in accounting, like your CIPA, your SICA. It doesn't require honors in accounting as much as you can have honors in accounting. Don't hear me wrong. But you can also have honors in taxation. You can also have honors in law, you know, because remember, tax is not necessarily an accounting thing. Tax is not necessarily a IFRS thing. It's not necessarily an urban thing. Also, it's its own thing. It's its own democrat. Like it's its own body. And tax, how people like to actually describe it, they like saying that tax is law. And yeah, I would say that the text is a little bit of law, hence also the requirements are not so strictly accounting, because they're also giving you that grace that, hey man, we are kind of we are a law thingy. We are a hybrid between accounting and law. So yeah, and with that being said, so that's the first part, right? NQL 8 level 8. And then next thing is you have to have articles, like you have to have a training company, rather just like Psycha. You're gonna have your career articles with any employee that will actually provide training for you towards you becoming a SAFE member. And you have board exams. You have one board exam. I stand to be corrected on that, but here you have a board exam which you have to pass, which basically tests your theory and also your competency on you applying your theory, like what you have learned in the 3 years of you doing your articles. And I think it's kind of like an advantage or disadvantage writing your board exams like towards your end of your articles, because remember, fresh from varsity, fresh from your honors, you have all the textbook knowledge, and it would be nice to just like write your theory then. But then I I kind of get them, because if you know your theory and you now just have learned throughout the articles that you just learned your application part of it, I guess it's kind of like fair, I don't know. Yeah. And after writing your board exams, you can apply to be a member. It's not like they're gonna give you, yay, you pass a board. You've done your articles, you pass your board exams. Yeah, here's accreditation. No, you have to apply to be a member. And yeah, after you apply to be a member, you are a SAIT member, and you can qualify. You're qualified either as a tax advisor or a tax practitioner. So a TASA. Sounds weird. Like I don't think we have enough TASAs to actually know about them. It's mostly like CASAs. It's ACCA. Yeah, but yeah, that's basically it. And man, it's a great career opportunity. It's a great thing to actually consider. You know why? It's interesting. Looking at text, just in general text, it's very interesting. The things that we actually learn in text, I'm doing third year, right? So the things we learn in that text module, it's so interesting. You just look at things and be like, wow, Like, wow. I was looking at there was an article written in Google about the two-pot system. It's about a year now that it has been in place, and we're just giving some kind of feedback on how things have changed within the retirement funds of people in South Africa, right? And I'm like, as I was reading I'm like, this is very interesting. Hmm, no, because it's something that I've learned in class, and I'm now seeing it practically in real life. It's unlike auditing, whereby you can actually see auditing practical when you're actually in an audit firm, or accounting when you're actually doing their accounting things, like when you actually have to do your journals, all of these things, and Manfin also. Like, you can actually see Manfin when you have to do with strategic company decisions, these big things. But then with tax, it's like, VAT, you pay VAT every day. Like when you buy something at Spa, you pay VAT. Sometimes you don't pay VAT. There's some reasons why you don't pay VAT in those transactions, because, well, that's, if you're importing things, there are import duties, there are customs, sometimes you get VAT, but you're like, I'm buying from China, why am I paying VAT in South Africa? That's, interesting. You buy on Shane like every now and again, like, that's some of you wanna own shares, you're gonna earn dividends, there's gonna be some tax implications to that. You're being financial literate, so yeah, there's gonna be some tax implications to that. Some of you wanna go to live in Scotland, Netherlands, wanna just change the country. You don't wanna be you like being a South African, don't get me wrong. Some of you don't. You like being a South African, but you just like, you want to explore the world, want to go to Canada, you want to go to Antarctica or whatever. There's some tax implications to that, especially if it's like a long-term thing. You're actually immigrating, you're migrating from South Africa. Oh, do I have those twisted? But yeah, like, there's some tax implications to that, you die. Not saying you're gonna die, please don't get me wrong. I'm not wishing any one of you that, and I'm definitely not wishing anyone to die. But something happens, or your child gets born. Okay, let's talk about someone being born. That's a tax event. That's a tax event. Yeah, like, we start seeing you as someone who's paying tax from the day you're being born. Like, it's it's very interesting. Like, also when you die, again, sorry about this example. When you die, like, it's a tax event. Like, you're still a taxpayer till the day you die, and after you die, you're still a taxpayer. So it's like, how? When will I stop being taxed, Auntie? You actually, in summary, you don't. You always be a taxpayer. But yeah, well, unless you, even if you immigrate from South Africa, yeah, yes, even if you immigrate, you leave South Africa, that's a tax event. But still, it doesn't mean that just because you're not taxed in South Africa, not taxed anywhere else. It's so hard being alive, man. Especially when you have to deal with tax. But yeah, it's a very interesting thing to, like, just talk about. It's like, if you having conversations, my mother is soon approaching the retirement age, and she was just talking to me about the tax two-pot system, and I'm like, I was talking about the two-pot system in the Google thing, right? So under the article, there were people commenting and be like, what if I withdraw a lump sum? Will it affect my annuities? Things like that. So an annuity is something that, like, if you receive money monthly, that's an annuity. That's like, from a huge lump sum, instead of getting it like your whole 1 million right now, you just get it maybe 10,000 every month. That's called an annuity. So people were like, how would this affect my retirement? How would this affect this and that? And to quite be frankly with you, and I don't know if I'm using that phrase right, but yeah, I was just I was in a position to actually advise them, because I have studied about this. I'm not saying I'm a tax advisor. I'm not saying I'm a tax practitioner. I'm just saying that I have some knowledge about it, so someone who has now gone through the module in third year. So yeah, um, I'm just advising them that, nah, man, it depends on which port. Remember, we were talking about two-port system, right? And it depends on which port you actually withdraw for. And if you are a person who was employed before the um the in is it before the act was introduced in September 2024. So if you're employed before then, September 2024, you don't have two ports, but rather you have three ports, right? So I'm just telling them, so if in these reports, if you withdraw from this port specifically and leave these ports, this is what will happen. And the assumptions that take place with it, because sometimes, like your retirements, oh, now I'm getting deep into this topic, but like your retirement annuities are based like affected by so many other things, right? So like I was just telling them about those things. So like just to make it the most simplest things, just those things. If we assume this and assume this and assume this won't change, right? So you can go take your money. But here's the implications of you taking your money in, because as much as it sounds as this is how I like to look at SARS. SARS is the big fat man. You remember those mockery things about the ANC, like the government, and like if you look at the ministers of ANC, you imagine the big fat guy. So that SARS for you. The SARS is the big fat guy who wants your money. So if you're trying to withdraw from your retirement funds before term, SARS will be like, let's see how we can tax you. Let's see how we can get the money from you. And the disadvantages of withdrawing early, so that and tell other people and be like, yeah, I've heard about the two-pot system. The disadvantages of withdrawing from your savings pot or from any pot is that will be taxed higher than if you withdraw when you are retiring, basically when your retirement fund reaches a maturity. So yeah, that's how interesting it is. You see, tax is nice. It's just a lot. I'll show you how my tax legislation is so flagged right now, but yeah, it's nice. Like it's logical. It makes, especially if you look at things from SARS's perspective and not from the taxpayer. It's like, I see you, big man. I see what you're trying to do. Let's get you your money. That's the sad thing about it, because at the end of the day, you're trying to help the big man or the fat man get fatter because you're feeding him with people's taxes. Yeah. Cheers, guys. I keep on saying that I'm gonna do the SEMA qualification thing, but yeah, I'll do it. And enjoy the rest of your recess. For those who are writing soon, matriculants, good luck. I heard that your trials have already started. Good luck. After this, trust me, the journey will be much more easier. It will be left with you what you do with it. There's no more content after trials. So if it's up to you if you just relax and go right to November. It's up to you if you push and make sure that November counts. And also, if you continue being consistent, like how you've actually been doing towards trials can actually be a reflection of how well you can do in November. Provided that you continue being consistent the same way towards November too, or you apply more effort. I didn't get no distinction during my trials, but I got distinctions in November because I actually had put more effort towards November. And yeah, so yeah, and everyone who's waiting on their results, uni kids, waiting on your results from your third block, good luck. You got this. And remember that this block doesn't really reflect who you are. We know the building is closed, man. Yeah, it doesn't reflect who you are. So main thing is block 4. That's where we separate men from boys. So yeah, cheers guys, love you always.